On today's hot sheet, I'm discussing this week's inventory update and the impact of NIMBYism, not in my backyard. Today is November 20th. I am Tre Serrano here in Colorado, and the hot sheet starts now. Only live daily news on the internet, brought to you exclusively by BAM. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. For access to the charts, the slides we'll be reviewing today and every day, sign up for BAM Max. We got a lot of great stuff to go over, a lot of inventory update, interest rates, 10-year treasuries, and this NIMBYism, the article that's super, super interesting that we're going to go over. This is where you get access to all of the hot sheet daily downloads, courses, bi-weekly masterminds, and the BAM X community. Use code TRE for 10% off of your subscription at the link description below. Prices for BAM X are going up December 1st. So sign up now, be grandfathered into today's prices for life. Let me know where you're tuning in from. I want to know. Let's see. Megan, Arizona Realtor. Ola from sunny DR. Lenny, Hermosa Beach, ready to make this money this week. It's going to be a really interesting week. There is, just before Black Friday, there's a lot of things going on. Dawn, good morning from East Texas. Love it. So let's dive right into the housing wire. So the effect of the mortgage rates, higher mortgage rates were expected to contribute to increased housing inventory, but the growth observed so far has not met desired levels. Housing wire, it's such a great news source. But the thing is, they're right most of the time, about half of the time. So I don't know why they thought that increased housing inventory would lead to the desired levels they wanted. But mortgage rates have fallen recently, suggesting a potential impact on housing data in the coming year if rates continue to decline. So now that we're seeing the 10-year go down, we're seeing interest rates go down, this is where I think we're going to see an increase in inventory. I don't know about you guys, but now we're seeing, good morning, Rebecca. Now we're seeing more mortgage applications. We're seeing people create more conversations around buying and selling. So I think now is a really, really great time to where it's kind of the, quote unquote, an opportunity to where we kind of hit the bottom. So we're going to go over the data. And according to Altos Research, the seasonal peak for housing inventory last year occurred on October 28th. Weekly inventory change from November 10th to November 17th, inventory actually rose from 566,941 to 569,898. So, excuse me. The inventory bottom for 2022 was only 240,000. That is crazy. The inventory peak for 2023 so far has been 569,898. What would be really interesting is if we saw more inventory this winter or Q1 of 2024 than we did in the peak of the summer, which normally the summer peaks are where you'll see the most amount of inventory. People are moving. Let me know if you are seeing any more inventory. There's Jeremy Knight and Kim, North Carolina. What's up? Okay, so for context, active listings this week in 2015 were 1,120,115. So if anybody was doing real estate in 2015, let me know. Let me know where you were doing it from. I want to see the OGs out there. OG, because I started in 2016. So let's go bring up the chart for the national single family inventory. Let's bring that up so we can reference it. Bobby, can you bring up that chart, please? Bobby, can you bring up that chart, please? All right. Let's see. I don't see the chart.
We are having some chart trouble, Trey. It'll be up in just a sec here.
No problem, no problem. So let's talk about inventory because I know in my market, and I'm watching the hot sheet, there says low inventory, but actually in the San Antonio market, we're actually seeing increased inventory to pre-pandemic levels. And when you see the national inventory, that's where you really start to see where the high dollar markets are actually, like LA, Miami, New York City, where the median house price is much higher than little old South Texas and San Antonio. We're seeing this very, very low inventory. So it's interesting how there's 7 or 8% interest rates, and we're also we're seeing multiple offers, which we're not seeing. We're seeing a ton of price drops. So let me go into the new listing trends. Now, I think there's going to be more listings coming up now that mortgage applications are higher and the 10-year is starting to drop, and consistently, as we'll go over in a second. So despite new data being at historically low levels, the data points to a positive trend in 2023. New listings, although declining weekly, remain positive year over year, forming a button and defying expectations of reaching new lows, even with rising mortgage rates. So when we get a chance, we're going to show you that on this chart. And Jennifer has been in it since 2002. Maria since 99. First year was 2013. Love it, man. Thanks for the love out here. So we're seeing more new listings coming out, at least in our market, but nationally, we're actually down from what's coming on the market for new listings. So let's go over price cuts and mortgage rates. So traditionally, a decrease in demand due to higher mortgage rates, now that we saw the 7s and the 8s, led to an increase in percentage of homes with price cuts. So this year, however, despite higher home prices and rates, the percentage of price cuts has been not caught up in 2022 levels when the home prices were falling. So it's interesting when you see price cuts, you also see a ton of expireds. You'll see a ton of high days on market or withdrawals from your MLS. And those are excellent opportunities to start the conversations with these people, with the sellers, and go over possible, like, hey, it didn't work in this market because of this reason, but here's the new market coming. And if you talk about that rates are coming down, I mean, one can infer the rates coming down, and now we should see some more inventory because there's a ton of people that are just waiting and waiting because the inflation is coming down and it's coming to a lower what's expected. The goal is to be around 2%, but right now the Feds are tracking it to around 3, but we're very, very close, which is great for the market. And also the jobs are also unemployment is starting to increase, which has a positive effect on the housing market. Don't want anybody to lose their jobs, but that's what happens. So a comparison of price cut percentages for 2023, 2022, and 2021 show that even mortgage rate rose up to 8% this year. Price cuts are still below last year's levels. So in 2023, 39% of listings had price cuts. 2022, 43% had price cuts. And in 2021, 28% had price cuts. Now, what's interesting is when we entered into early 2022, everyone was very optimistic. There we go. Woo! Go Bobby. That's great. Okay. So let's look at the national single-family inventory. And if we go back to 2019, we see that they were very close to 1 million existing single-family inventory. But then, of course, we saw the pandemic drop drastically. We saw multiple offers, the good or bad all times, however you want to see it. And then coming out of it in 2022, that's when rates went from 4 to 5 to 6, like within a weekend of how it changed so much. So here we have a chart of single family listings with price drops, and it has a correlation here because as rates went up, you see the price drops went up. So here, this is where rates started to increase in April 1st, 2022, started to increase down to October, and it really peaked around November, October of 2022. And then price drops started to come down because we actually saw rates start to come down just for early Q1 of 2023. And now, here in the Q2, Q3, coming into Q4, look at this tiny, tiny plateau that we're seeing in listings with price drops. It's actually leveling off, and actually it could go down if these rates continue to trend the way they are. And now we're seeing single family new listings, if you compare it to 2021, which is that light pink, and then 2022, November 1st to December 1st, now we're starting to see it decline nationally. And this is according to Housing Wire. We're starting to see it decline. And then the dark maroon is also starting to decline. But if you look at August 1st, or actually, let's go back even more, for June 1st to today, it seems pretty level. Even with 7 or 8% interest rates, we're seeing single family new listings coming on the market leveling, but it's not catching up to the demand that we've been seeing, and even more demand that we're about to see if these rates continue to trend down. Awesome. So percentage of price cuts, we saw in 2023 only 39%, but even with the huge going from 3% to 8% interest rates, we only saw in 2023 a 39% price cuts, which is, that's a lot. It really hurts affordability. And here shortly, we're going to talk about the NIMBYism, which is the Fed's. They had a meeting and they presented it to the Resi Club, which we're going to go over in a second. It's really interesting. So, upcoming economic data and market expectations. We have some important economic data on the horizon. The leading economic index and the existing home sales report will likely see an uptick in monthly supply of homes, reacting to the earlier surge in mortgage rates, as we just talked about. Folks are waiting to see how Black Friday sales play out, although it's not the same as it was 30 years ago. We'll also be watching for any volatility in the bond market and mortgage rates during this low-key holiday trading week. Love it. How many of you are working this holiday week and the weekend and next week? Come on, let me know, because I am. Even though I'm in beautiful Colorado, I am still working because I think it's an excellent opportunity right now. There's a lot of conversations happening. So now we're going to go into the Resi Club. So let's pull up the article, Bobby, if we can. And so it's housing market affordability is made worse by NIMBYism, said Richard Fed President Tom Barkin. So if we get a second, yes, Kim is working this weekend. Brad, yep, also love it. Okay, so we're going to go into this. Barkin, he says, subsidized current prices at a wide scale will only increase demand further, worsening the imbalance with supply. Suppressing demand isn't an attractive option either. Of course, you don't want to suppress demand. So that leaves us with the need to increase housing supply. I think we're all on the same page that we want to increase housing supply. But what's interesting in the NIMBYism is not in my backyard. So they want to increase affordability. They want to increase supply, but not in their backyard. And Fed President Tom Barkin, he is a proponent for affordable housing, but the opposition is saying no. Well, is there other ways we can do this? Like, of course not. People need affordable housing. They just don't want it in their backyard. So The key points to this article, I'll pull it up in a second. Okay. So the article, to summarize, is just presenting the housing affordability challenge. So Richmond Fed President Tom Barkin addressed the housing affordability crisis, emphasizing its impact on workers, particularly in relation to homeownership becoming increasingly unattainable for many. Are you seeing people in your local market being priced out? Let me know. So, supply and demand imbalance. Barkin highlighted the widening gap between housing demand and supply, attributing the issues to increased demand driven by factors like low interest rates, while construction costs, skilled labor shortages, and other factors constrain supply. Now, I don't know about your market. I in San Antonio are not seeing a shortage in labor. Actually, a lot of construction companies are going upside down. Um, in at least in my local market, because we have a pretty neutral, if not higher inventory market, unlike others. So the not in my backyardism critique. The speech criticized the not in my backyard and identified them as a barrier to housing development. Barkin stressed the need for communities to address concerns relating to environmental impacts, infrastructure, and schools crowding to gain support for housing initiative. Guys, if you're not making content around this, you are bananas. You have to make this content of what's coming to your local market on YouTube, long form, short form, to talk about where the initiative is. And of course, people in your local market are going to have an uproar. I don't want this. And they'll have NIMBYisms in your local market. And you can be kind of the center of that conversation, which I think is awesome. Excuse me. Okay, so his 5-step plan for communities, Barkin outlined a 5-step plan for communities to expedite home building, including rallying community support, attracting, supporting developers through financial incentives, and streamline permitting, addressing land availability, tracking construction costs, and engaging non-traditional partners like foundations, employers, colleges, and churches. So if you have non-traditional partners to invest in housing developments, man, that's awesome. I mean, you can get the community involved, and I would. That's some great content ideas, because the amount of comments you'll get for people saying, "I don't want that in my neighborhood," or "That's a terrible idea," whatever it is. But that is definitely some great content ideas there. So, rising rental costs. The speech acknowledged that renting is becoming more prohibitive as rental costs increase due to the supply and demand challenges affecting the housing market. So, the solutions, Barkin suggested innovative solutions with the housing crisis, such as making smaller homes. So, I did a YouTube video on tiny homes that Lennar, the home builder, they're not my favorite. And I'm sure you have very similar experiences with Lennar. But they did tiny homes in San Antonio. I did full length videos, short form videos, and they went semi viral, which doesn't mean that it has to go viral every time, but it's just it's interesting what's coming to local markets. And it really just has to be smaller because of building costs and the shortage of labor in most markets. So, engaging in non traditional partners. This article highlighted the roles of non traditional partners, such as, I went over that already. Okay. So, in addressing the housing challenge, citing examples of financial support, investments, and collaborations with those entities to boost housing initiatives. So let's pull up the Zillow Home Value Index. Zillow, not my favorite real estate company, but they have excellent data that we can all see. Now, this is a little tough to read, but I will try my best. Let's, Bobby, can you zoom in a little bit of this markets? See, let's go to the worst and the home value indexes that have dropped the most. Let's see. If you can't see that, I'll put up here. So we have Seattle, Tacoma down 9.1% from the peak. And let's see, San Jose, Santa Clara, California. My buddy Danny, he's awesome there. It's down 9%, which is super interesting. San Francisco down 11.2% since the peak. We have Denver, Aurora, Lakewood, Colorado, which is actually not too far where I'm staying, is down 7.2%. Sacramento down 7.6%. Let's switch markets here. Let's go to Jacksonville, Florida. A very, very stable market looks like, down 2.9% from the peak. We have Phoenix and Chandler down 8%. Las Vegas down 7.4%. And the biggest one, and a good buddy of mine, Jeremy Knight, is down 18.3% from the peak. So this is great content to work around and promote here. So I think there's been a huge change this last month, and especially in kind of inventory peaking, and you have the Feds now kind of stabilizing the rates. You have interest rates coming to slowly trickling down. If it continues, it'd be really interesting to see. So month over month, let's see some bigger changes. Not much going on in terms of month over month changes. We have Baltimore down 0.4%. All this is less than 1%. Cincinnati, less than 1%. And this is just your home values. Let's see. Indianapolis, down 0.5%. Orlando is down 0, totally flatline month over month. And year over year, we're actually seeing a lot of increases. For year over year, from that 7-8% to now, Milwaukee, year over year, is 8.5% up in home values. Providence, 7%. Boston, 6.8%. San Diego, sunny San Diego, is 6.5% up. Is there any other market you want to see? Jeff says inventory will pick up more if we go below 6%. I totally agree, Jeff. Jeff, let me know where you're coming in from. I do think that it will go up. And when inventory goes up, that is definitely some conversations you can create with your local market. So let's see. A couple more markets here. We'll look at Pittsburgh, Pennsylvania. Year over year is up. And then the biggest one, obviously, no surprise, is Austin Round Rock, down year over year, 9.2%. San Antonio and New Braunfels corridor, the Metroplex, is down year over year, 2.9%. Even with that huge spike we're seeing in South Texas, they're only affected at 2.9%. Las Vegas year over year, 2.6%. And Dallas-Fort Worth, 1.6%. Houston only down 1.2%. And if there's any other markets, let's see, you want to see, let me know. All right. So now let's bring up the 10-year Treasury. See if we can pull that up, Bobby. If not, no worries. I can have it here. I can just go over it. All right, beautiful. So 10-year Treasury is actually up as the market opens, only 0.01%. But this morning when I was signing on, it was only up very, very slightly. But it's really just the past few days. It's just been at 4, hovering around 4.4, which is awesome. I mean, it's stability. Hopefully the Feds actually did this soft landing that they were hoping for. And, we don't want a huge crash in the job market, but hopefully that will suffice. So the 30-year from November 17th, which was on Friday, was 7.37 30-year fixed. And then the day before that was, so it's up. It's just really, really stable. And that is for the 30-year fix. Let's see. Kim says, a study by UNC Charlotte on affordability in Charlotte noted that in 2018, household income to afford median house price was $75,917 in 2023. That number is now $152,000. Prices are up 7.5%. It's really an art to communicate how you have such a huge spike in interest rates, and having this conversation with buyers and sellers and convincing them is, it's difficult to because some people they see the worst, or they watch CNN and all these things that everything's crashing and they're just waiting for it. So it's just good practice to go over how we had this huge spike in price in interest rates, but not really a huge spike in home prices. So yeah, it's just really interesting. It's a great time to be in this. I think coming the next few months is going to be interesting to see. If you want, to talk and have literature for how to explain this to your sellers as they want to discuss these price changes, uh, download all of the hot sheet information on BAMX. Use code TRE for 10% off. Again, these prices will go up. Be grandfathered in like myself. Join our community in Facebook. We talk about all the goodness, and hope you have great conversations. So I will see you next time. I appreciate everybody watching this, and adios.